Good evening, everyone, and welcome to our first home buying seminar. My name is Shaheen, and I'm the Chief Lending Officer at the Credit Union. We're excited to have you here tonight, and we truly appreciate you taking the time to invest in your future. For many people, purchasing a home is the single largest financial decision they will ever make. It's not just about buying a house, it's about building stability, creating memories, and investing in your future, and achieving a major milestone. Because of that, buying a home should never be a rushed decision. It should be a thoughtful, informed process, and that's exactly why we're here tonight. Our goal this evening is to help guide you through the home buying journey, answer your questions, and provide you with valuable insights so you can make confident and informed decisions. One of the very first and most important steps in the process of choosing a home is choosing the right realtor. A good realtor is more than just someone showing you homes. They should be someone who truly has your best interest at heart, someone who listens carefully to your needs and priorities, whether that's the location, the neighborhood, proximity to work, school district, budget, or the long-term goals that you have for your family and your future. Choosing the right realtor can make all the difference in your home buying experience, so it's important to choose wisely. Tonight, we're fortunate to have two knowledgeable professionals with us who are here to make this process easier and less overwhelming. First, I'd like to introduce Cliff, our real estate manager. And joining him is Daniel, our mortgage loan officer. They will walk you through the financing side of the process and help you better understand what to expect when preparing for a mortgage and purchasing a home. We hope tonight's seminar gives you valuable information, practical guidance, and the confidence to take the next steps towards home ownership. There is a Q&A button that you can click on and ask questions, and we will get to your questions at the end of the presentation. Thank you again for being here, and let's get started. Cliff, it's all yours.
Good evening, everyone. My name is Cliff. I'm the real estate manager for PFCU. Thank you all for joining. As Shaheen said, our goal for this evening is to introduce to you all and teach you the difference between the process of coming into getting your first mortgage, right? So, with that, you'll learn the home buying process, the financial preparation involved with it, and how PFCU will support you. Okay? Why is buying a home important? As you can see here, you can build equity instead of paying rent, the long-term financial stability, and the investment in your future. And owning a home, a portion of the payment that you make to your mortgage goes to the ownership of your property. You build what is called equity. When you're paying rent, all of it is just going to your landlord. What owning a home allows you to do is you now have an asset that you own and you're building long-term financial stability for you and your family. Are you ready to buy a home? Which is the most important thing, right? So, minimum credit score, 620 FICO. Now, with that, what's important is you must have a minimum of 3 trade lines with at least 2 years worth of credit history. What is considered a trade line? Any kind of credit that you have, whether it's a credit card, an auto loan, even student loans count as trade lines. And then stable income. Stable income is at least 2 years of verifiable income, whether that is self-employment or W-2 income, but you will need to have at least 2 years worth. And then the most important thing, or one of the most important things, is debt to income. So with most guidelines, your debt to income maximum must be no greater than 50%. And how they qualify debt to income is they take what you earn divided by the debts that you have and servicing. And that includes your projected mortgage payment. So if you're interested in purchasing a home and you want to buy a car, wait till after you buy the house, then get the car, because then that will impact how much you qualify for. And then a myth. Some people believe that you need to save up at least 20% to purchase a home. That is not the case. There are programs that exist with FHA where you can go as low as 3.5%. Understanding cost. Okay. So upfront, you have your down payment and your closing costs. So your down payment is what you're putting down to purchase the home versus the down payment. The other thing that is considered into the cost in getting this home is your mortgage payment, which is your, oftentimes if it's escrowed, which means within your mortgage payment, your taxes and insurance are included. That way, at the end of the year, you don't have to pay the money yourself. It's coming out of your mortgage payment. And then an additional thing that you have to keep in mind with the cost is if you are purchasing a home that has a homeowners association, that is an additional cost, and you have to factor in maintenance. Budget for cutting the grass, putting money aside for repairs. Always budget beyond what your payment is. Next, down payment versus closing costs. The down payment is the amount required for the loan type. So, as I mentioned earlier, with FHA, you can go as low as 3.5%. But with a conventional loan, you have the ability to go from 3% up to 20%. Closing costs. Closing costs are the total costs associated with getting the loan, i.e., your appraisal, your attorney fees, and other fees that may be associated. There is a huge difference between a down payment and a closing cost. They are not the same. So again, your closing costs are the fees associated with getting your loan, and your down payment is what you have to require to put down to get the home. I'm going to pass it on to Daniel.
Good evening, everybody. This is I'll actually take you through the end of the presentation, but thanks for joining us. This is a scenario for a mortgage that we're currently doing now. So the loan amount being $595, that's not the purchase price, that's after the down payment. So that's the amount we're financing. The interest rate would be 5.875 here on a 30-year loan. So if with the monthly payment being $3,500 a month there, and the closing costs being $9,500. And now, if your loan amount's lower than that, obviously your monthly payment and closing costs would be a little bit lower as well. So every situation's different, but this is just a scenario here for you so you have an idea. The steps in the mortgage process. First step is contacting us. Then we can get you go over your situation, see if it's the right time for you to go ahead and move forward with a pre-approval. If you're not ready for a pre-approval, we can always work with you on credit if you need to start building credit. If you have some items on your credit report that you need help resolving, we can assist you with credit repair as well. So if you're not ready to move forward, don't hesitate to reach out to us. We can help you get there. But if you are ready, we can send you a link to our application and a list of documents we would need to get you started. So the first step when you're ready is to get pre-approved before you start looking for a home. So getting pre-approved tells you how much what your price range is on the home that you're looking to purchase. So that'll give your real estate agent a good idea on what properties to look at for you, and give you a good idea as well. So you're not looking over your pre-approval amount. And And then once you're pre-approved, find a trusted real estate agent. Maybe it's someone you know or someone that's referred to you by someone that you trust. It's important to find a good real estate agent, just as it is a good mortgage lender who's knowledgeable and can help walk you through the process, especially as a first-time buyer, because there's a lot involved with it. So once you found an agent, you and your agent can start house hunting. You'll know your pre-approval amount, so you'll know what houses to look for. And then once you've found a property that you want to purchase, you'll make an offer. And then the seller can, do a few things. They can either accept your offer, they can deny your offer, or they can counteroffer. So your real estate agent will walk you through that process, depending on the seller's offer there back to you. And if the seller does accept your terms, then your real estate agents will put together a sales contract that you and the seller would sign to agree upon the sale price. And then at that point, you'll do your blanket on the word. Help me out here, Cliff. The
Due diligence.
due diligence, yes. Um, so you'll have to lock in the contract and get your financing in order as well. So once that's taken care of, then we'll move forward with the inspection and appraisal, and then move on to the final approval and closing once we have the appraisal done. This is a list. Don't feel daunted by the length of the list here. It's just a lot of this won't apply to some people. Just like I said, every case is different. Every loan's different. So if you're a W-2 employee, we would just need to get 30 days of pay stubs, your 2 most recent years of W-2s and tax returns, um, a copy of your government issued ID, and then if you're self-employed, we would need to get business tax returns for the last 2 years and year-to-date profit and loss. And then bank statements we would need to verify down payment funds, closing costs, things like that. So this is just a list of documents that we would send you once you're ready to move forward to get the pre-approval. These are the documents we would need to get you that pre-approval. So there's a few different types of loans. I know Cliff touched on them. Conventional loans. These are just your traditional loan. If you're putting 20% down, um, we could, potentially keep the loan in-house with Platinum, and and that would get you, your traditional loan with no primary or mortgage insurance, things like that. FHA loans, Cliff had mentioned this is the loan that you could put as little as 3.5% down. Conventional loans, you can also put a lower amount down, but in order to get the best rates, things like that, putting 20% down does help. Um, Down payment options, again, as low as 3.5%. You can do, 20%. You could do more than 20% if you wanted to, but there are some flexible options for you there as well. As far as understanding the rate versus payment, so the rate is dependent on a few factors. So it depends on your credit, uh, down payment amount, loan to value, and loan to value means how much you're financing versus how much the house is worth. So it's a good idea to try to get your credit score as high as possible before we start the process. And like we said, we can help you get there. So before we get the process started, we'll try to get your rate as high as possible to help you get the best rate possible.
And also to add, the better your score is, the lower the rate, the better your pricing may be as far as what your monthly payment is as well.
And here's some rates for today just on FHA loans here. So 5.99 on a 30-year and 5.875 on a 15-year. So there's just an example of some rates for today. And some tips for first-time home buyers. Like Cliff had mentioned, don't max out your budget. You'll want to budget for the down payment amount and your closing costs. Keep your budget in line so you have money set aside for home repairs when you need them, after we've closed the loan, so for years down the road, so that you have that nest egg, so you don't have to take out any other loans against the property, like home equity loans, things like that. So it's always a good idea to set aside some money for any future repairs there. Getting pre-approved early, like we had mentioned, just make sure that before you start looking for homes, get that pre-approval so you know what you qualify for, and you're not wasting any of your time there. Avoid any major financial changes, so no car loans, no credit, no new credit cards. Once we've pulled credit, just try to make sure that you don't add any other inquiries on that credit report, because that might throw a wrench in things. And then again, work with trusted realtors, closing attorneys, which will can help you provide you with there. And then for first-time home buyers, there is a first-time home buying class that you'll have to go through. But we'll get you set up with that and walk you through the steps of doing that. So you'll do a first-time home buyers education course, and then we'll guide you through every step of the way through the process, and the next steps to apply once you're ready to move forward with the loan. This month we are offering a promotion, $500 towards your appraisal cost. If we were to hold the loan in-house, so if you put at least 20% down, we would hold the loan in-house with Platinum Federal Credit Union, and there would be no origination fees. Also, there is what's called an intangible tax. That is a tax charged by local municipalities or the state. So we would not charge intangible tax. I think it's $1.50 for every $500 on the loan, which the state would charge. So since we're a federal credit union, we would not have to charge you that fee. And then if you put 20% down, you would not have primary mortgage insurance. So that would also come off the loan there. So next. And here's my contact information. If you have any questions, if you're ready to start, if you're not ready to start but have questions about credit or loan types, I'm here Monday through Friday. Give me a call anytime, and we can get your pre-approval started or start working on any credit repair if we need to. So we appreciate you attending the seminar tonight. I think we're going to move to the question and answer portion now.
Yeah, before we move to question and answers, I just want to put it out there that we are a credit union owned by our members, and we work for our membership. So if you are really interested in home ownership, if you need information about how do I improve my credit, come by the office. We will do a soft pull. Daniel will do a soft pull for you. He will help you improve your credit if needed. Your rate will depend on your credit score. So someone from a 700 to a 725, the 725 will get you a better rate. So he will work with you one-on-one to improve your credit so that you can get the best option, the best financing available. You have to understand that once you do a mortgage loan, you're going to be locked in for at that rate for 15 years or 30 years. And refinancing, there is a cost associated to refinancing. So you want to get the best rate at the lowest cost, correct? So do your homework. Do not rush into this. Do not rush into the mortgage. Come by the credit union. We'll do a consultation for you if required. Having that firm offer when you have a verified approval or a pre-approval letter, and when you go to make that offer, believe me, that letter holds weightage. So if I'm the seller, I will say, hey, this person has a verified approval letter. So maybe it is better for me to take this offer rather than someone else's offer who may or may not be approved for a loan. These are things that will help you down the road. Now, when you talk about closing costs, the closing cost depends on the loan amount. It also depends on the cost of the attorney. The attorney fees that makes up a lot on the closing costs. So choosing the right attorney for your closing is also very important. Now the credit union does a lot of mortgage closings. So our attorney, we have a subsidized closing attorney fee, and you can use our attorney, or you can compare our attorney costs with an outside attorney, so you can compare what the costs are. So Ismail, I see your question. What is the breakup of the closing costs? I would recommend that you shop around to get the best rate so that your fees are as low as possible. Again, when the loans are closed with the credit union, you save on intangible taxes. So that is another saving that you would get on the closing. Zoya, would you like to go over the questions so that Cliff or Daniel can answer them?
Absolutely.
Yeah.
Good evening, everyone. By the way, my name is Zoya. I'm the marketing manager at PFCU. So another question that we had is if you guys can discuss the down payment assistance programs or grants that are available sometimes from cities or states.
So down payment assistance programs are predicated on where you are. Some local municipalities, or like cities and counties, may have their own down payment assistance programs. What you would have to do is you would have to go to that county that you desire to purchase the home in and apply for their down payment assistance grants that they have available. Typically, what the qualifiers are is it's typically income restricted, and there's sometimes a clause that says that you can't sell the home within a time period. It could either be 3 to 5 years. If so, then you'd have to pay back whatever that assistance is. In most places, the assistance can go up to 20,000, sometimes more.
Great. And another question we had from a member is, what defines a first-time home buyer? If there's more than one borrower, do we both need to be FTHB?
Yes, you both would have to be first-time home buyers for you to be considered a first-time home buyer.
Great. And we had another question is, can I apply just for equity lines without refinancing, closing costs, etc.?
You actually can. So the great thing is with PFCU, we do offer, we do have the ability to do refinancing. So if you wanted an equity line of credit, we are able to do it in the states of Georgia, Florida, Alabama, for a
Texas.
HELOC in
Right.
Texas. Now, if you're looking to
We
just
don't
do
offer
it,
HELOCs in Texas.
no,
The
no,
HELOCs are just
Florida, Alabama,
Alabama, Florida, and Georgia.
and Georgia. Now, if you wanted to just do a refinance, essentially we could do refinances in any state through Rocket Mortgage, but primarily to keep it with PFCU is Florida, Georgia, Alabama, and Texas.
And we had another question.
Okay.
Someone who is a recent graduate who is starting a job soon, how long of a work/pay history do they need to accumulate before getting a pre-approval?
2 years, right?
If
Yeah.
you also show that you were in college and you just graduated, and you have the offer letter and you have the first pay stub, I believe Rocket has a program that would benefit you. And if you reach out to Daniel tomorrow, he would give you more information on the recent graduate loan.
And next question is, what is the process for a HELOC?
So our process for the HELOC is very simple. We ask for general documentation, similar to what the pre-approval checklist was, but a little more customized to a homeowner. Our HELOCs, we do it here in Georgia, Florida, Alabama. Um, we don't You don't have to pay closing costs if you use at least 20% of the line upon it being dispersed. And outside, well, only fees that you would pay for would be for the appraisal, which is typically $500. Sometimes it can be more, just depending on the size of the home.
And I guess just to define a HELOC for those that don't know, a HELOC is when you already own a home and you have some equity in that home and you want to take out a line of credit against that equity. So our home equity loans, you have a 5-year draw period, so you can draw on that line of credit for 5 years, and then you can pay the payoff is 10 years. So and we can go up to 80% of the value of the home combined with your first mortgage.
And the next question we have is, how do I get rid of an FHA loan so I don't have to pay PMI?
You would have to refinance into a conventional. I mean, obviously, it's best to wait until you hit that 80% mark. That way, because even with a conventional, until you hit 80%, you'll have that mortgage insurance. So once you hit 80% on the FHA, then it's a good idea to refinance. And then you'll have closing costs, but they'll be much lower than you purchased.
And does PFCU work in the West Coast?
Yes, we do by way of Rocket Mortgage. We're able to lend in all 50 states. So being in the West Coast will not prohibit us from being able to facilitate you getting your first mortgage or your second one or your third, depending on how well you're doing. But yes, we can help.
Great. And we had a few questions asking if they are going to get a copy of the presentation. Yes, all attendees will be emailed a copy of the presentation after the webinar. Just keep an eye out for it. And next question we have is if we can talk about no closing cost loans.
We don't offer no closing cost loans.
So if someone tells you that there are no closing cost loans, they basically build the fees into the rate.
Yeah.
So the rate will be higher than what you would pay if you pay the closing cost upfront.
And if someone has a student loan, will they be eligible for this loan?
Yes, you can. Having student loans do not prohibit you from being able to be qualified for a mortgage. I can tell you from personal experience because I went to college and I had student loans and I still have a mortgage. So you can still be able to get a mortgage with student loans. Now, it does impact your debt to income ratio. So what we spoke about before, the amount that you will qualify for will be impacted because of the amount of student loans that you're servicing.
Great. And again, about student loans, how does ongoing payments for student loans affect approvals? Is it better to knock out the smaller loans that have a lower interest or work on the higher interest loans that may not be closed by the time they get their approval for the home?
It's going
So
to
it's
depend
more
on,
like,
debt to income, really.
yeah.
So it, it depends on what your monthly payment is on those loans. Paying off the smaller ones, you probably have a smaller monthly payment. So your debt to income is your gross monthly income divided by your monthly liabilities that are on your credit report, plus the new mortgage payment. So it's just going to depend. Every case is going to be different. So it's just going to depend on what those payments are. Um, and that's probably a good idea to contact us first so we can do a soft pull on your credit and, kind of get some income information. And then we can tell you what your debt to income looks like. And if maybe you need to pay off something on your credit report, then we can advise you to do that or, give you your options at least.
Great. And is a home equity line of credit better than a line of credit on a home? Which is more beneficial?
They're the same thing. Um, a HELOC is a home equity line of credit. Having a line of credit against your home is the same product. Essentially, it gives you the flexibility to be able to borrow when you need it. So let's say you take a home equity line of credit for 100,000, you're not obligated to use the entire thing. Especially with us, you have a 5-year drop period. So in the 5 years, if 1 month you decide that you need 20,000, you can just pull it from your HELOC and you can pay it off over time.
And are 80-10-10 loans still available?
Eighty, 10, 10 or not?
I don't know if Rocket would offer those.
I mean, we'll have to get back to you on that
Yeah.
because I know they were available back in the day.
Yeah.
Okay, and we have a question from someone. I'll let them ask their question. Hussein, you can go ahead and unmute and ask your question if you want.
No, I don't have any questions. Sorry.
Okay. Right. If we have any more questions or if people, you're welcome to raise your hand and we can unmute you so you can ask a question directly as well. I guess there are no more questions. So
Well, we can offer financing options all over the country. We have partners that we have other companies that we partner with. So if you're on the West Coast, if you're in New York, we can get your loan done. I know some of you had questions about selling loans and servicing loans. We're not able to keep all our loans on our books. And yes, we do sell our loans in the secondary market, and we have other companies that that would service the loans later on. It's just a mixture mixture of loans that we keep. Either we sell or we keep on our books. What would be the refinancing rate, Mr. Malik? That would all depend on the credit and the loan amount and whether the term is a 15-year or a 30-year. Cliff, what is our 15-year loan rate right now? And our 30-year, I think in the example, the 30-year rate was 5.875. Yeah, like you asked. 5.875 was the 30-year with the borrower had put, okay,
That's just the FHA. That's not the
conventional.
conventional.
Yeah,
Yeah,
and if you're over, it depends on whether you're doing a jumbo loan, a conventional loan, FHA loan. They're all going to be a little bit different. Um, FHA is typically a little bit lower than conventional, and conventional is a little bit lower than jumbo. So it depends.
And another question we just got is if we have any special consideration for Jamati members who have recently arrived, and what legal status the applicants have to be.
we do need the borrower to have a legal status to apply for a mortgage. That would be a requirement.
Also, I just had a member ask about this who was a non-permanent resident. And they, I think the credit history wasn't long enough, so just make sure you have those 3 trade lines and 2 years of credit history. So that's the biggest factor, really. And I think Rocket does offer a loan as long as you have those 3 trade lines and 2 years of credit history. They offer a loan for non-permanent residents.
And another question we recently received is if we sell someone's loan, will they be contacted by the lender that holds their loan for refinancing, or will they only be contacted by PFCU?
So while we're underwriting and doing the loan, we would be your point of contact. And once it is sold, then it will be the company that has actually bought your loan.
And what is PFCU's refinancing rate to convert from FHA to a conventional loan?
So
It
that's
would,
oh,
yeah, it would just depend on the rate at that time. So whatever the conventional rate is for, I mean, we can look at going back out to 30 years on a conventional, or you can move down to a 20 or a 15 year. So whatever the rate is at that time, hopefully rates keep going down. But that'd be hard to guess right now. Um, so yeah, we'll just have to see at that time what rates look like.
and to add, your credit score also impacts what your qualifying rate is. So the good thing is with PFCU is because we're committed to our members, we can give you a look. We can compare what the rates are so that at least you're making an informed decision. And we'll work to make sure that we're working in your best interest.
If you go on our website, we have a mortgage loan calculator. So it can also show you if just assuming if your rate is at 6.5% and if the credit union is offering you a lower rate, it'll show you how much you will be saving with interest over the period of time so that you can make an informed decision whether it's good to refinance your loan or not. Any other questions?
We don't have any more questions. Oh, we just got one. In the calculator, should they input pre-tax or post-tax income?
Pre-tax, gross income. So pre-tax.
Okay. We don't have any more questions. If you guys want to reiterate what are best rates, any highlights?
So again, what's appearing on the screen is what today's rate is for FHA. Obviously, it's contingent. The rates are going to be contingent based on a person's qualifying score. Um, Again, PFCU, we are literally here to serve our members, which is you all. Where other institutions may not want to walk you through the process, whether that's getting you to pre-approval or telling you what you need to do to get you ready to be pre-approved, and then walking you through the process, answering questions that you may have, even coaching you on what to do and what not to do until you get to the end. And then after you close, we don't go away. We're still here. If you have mortgage questions, we're here. Uh, do you need to pay your insurance? Yes, we'll coach you through the process. So it's a lifelong commitment.
Yeah, and I guess a thing to highlight too is, and I run into this a lot, just because you see the rates here on the screen, that doesn't mean it's the lowest rate we can get you. And you might get a lower quote from another lender, but you also have to look at the fees they may be charging you to pay down. So you can always get a lower rate. Closing costs will be a little bit higher. But a lot of lenders will quote you a lower rate at first, and then, the closing costs will be higher because they're quoting in a rate that you have to pay down to get to. So that's one thing to keep in mind.
Okay, well, we have no more questions from attendees, so we can go ahead and we thank everyone for attending, and we appreciate all of our attendees for joining us tonight. Again, like I said, everybody will receive a recording of this presentation. Just keep an eye out on your emails. You should receive something in the next few days. Yeah. Shaheen, Daniel, Cliff, any last words?
Well, thank you. I just want to say thank you for attending. Like I've mentioned, Daniel and Cliff are here to help you with any questions that you have. We can coach you through the entire process, and feel free to reach out to us if you need anything. Thank you.
Thank you, everyone.
Thank you, everyone.